This is Morning Stock Watch with the weekly market report for the week ending March 27th, 2020. This report includes the broad market along with Boeing and Tesla. First, we're looking at the broad market, the 11 sector ETFs, simply looking at the weekly candles in comparison with the S&P. All 11 sectors closed the week green. Utilities, industrials, and real estate with the strongest bounce this week. Last week, we looked at industrials, utilities, and energy, the three sectors that led the market lower last week due to the economic shutdown. We looked at several tickers of each sector to include Boeing in industrials, ExxonMobil in energy, and Wells Fargo in financials. Last week, nearly all of the chart's weekly candles closed very close to the major support, which led us to anticipate a bounce coming to the market soon. Not necessarily a reversal, but definitely a decent bounce. We in fact had a nice bounce this week. For the looks of these charts, a couple of the sectors, including utilities, have reclaimed the 200-period moving average on Friday. However, the overhead moving averages are sort of steep, almost looking into price. When they look directly at price like this, that gives a very, very large amount of resistance until they flatten out, which can be done with either some consolidation or more downside. This gives me the feeling that the market may be able to move up a tad, but then reject it near these moving averages for more downside. The complete opposite could happen, but this is what the charts look like right now. Going to the S&P 500 ETF SPY. Weekly closing price $253.42, up about 10% from the lows of last week. Got a green week after tons of selling from the all-time highs set in February. Last week on the monthly chart, we saw that price closed right on top of the 100-period moving average. This looked like it would perhaps have some more downside because of it closing right on the moving average. On Monday, we did have some more downside to as low as 217.75, we can see here, where the market had a good bounce. This is now the 52-week low for the SPY. Notice that this bounce is not too far from the 213 support bounce we were looking for. The weekly chart, we can easily see this very large green candle with substantial upper and lower wicks, selling off from the resistance at 264. The resistance ceiling can be seen here with all of this dense price action in these areas. So this was a good area for the market to sell off from on Friday. Now let's look a bit closer and see where SPY could actually go. As always, there are two sides to every trade. The idea is to be on the good side of the trade more times than not, with each trade having limited risk. With that said, let's go and see where this thing can go. On this 4-hour chart of the SPY, there's a lot of interesting things to see. First is the percent move from the recent lows, which is up 21%, a 38.2% retracement from the highs so far. That's a good amount in one bite. That move also brings it to the 100-period moving average, where it ended up closing below, as well as the Tenkan-sen, that thick green line of the Ichimouku cloud indicator. This shows a bit of weakness, but nothing too serious on its own. But next, let's start looking for divergences on this chart. There aren't any recent divergences with RSI or MACD signal lines, but on volume, we can see decreasing volume with rising prices on both the standard volumes histogram as well as MACD's histogram. There is also an imminent bearish crossover on MACD here. Currently, this, as it looks here in this chart, is bearish. Good example of that is right here, almost the same setup, decreasing volume with higher highs. We can see what happened right after that. Downside support areas are clear at 244 and 240. If we see 240 broken with authority, then it's very possible we could retest the lows at 217. Again, if the lows are retested, then that could either end in a double bottom bounce, or if that fails, then definitely lower prices, this time to perhaps as low as $200. We watched two individual stocks, with the first being Boeing, ticker BA. Weekly close on $162.00, up 70% from last week's close. This 4-hour chart shows the 75% drop in price from the highs, from $350 per share down to $89. Price action from 2006. At the lows, we got some choppy price action here, with some positive divergence here that led to the 51% bounce from the lows. Checking our levels with the Fibonacci retracement, we can see a 38.2% retracement, just like the S&P. With this really nice run up, I would be cautious with a 51% gain. We're likely going to see some downside along with the market. Here we see some bearish continuation here. Pretty long pronounced divergent line on the signal lines of both indicators and bearish divergence on the histogram as well. There's also a bearish crossover in the works. I'm bullish for Boeing, but things look bearish for the near term, somewhere around the 110 area, and maybe even down to retest the lows. Again, if a retest happens, that opens the possibility for lower prices. And last, there's Tesla. Weekly close, 514.36, up about 17% this week. Got quite a few lines on this 2-hour chart. We can see a very large downward wedge that failed and reclaimed. Since this wedge has failed once, we can go ahead and say the rules for a downward wedge may not apply. Falling wedges like this normally are bullish, but perhaps not this one. Price has been rejected at the 567 area, which has a good amount of price action right here. Also rejected at this strong negative trend line right here. As the price is back in this wedge thing, several bearish signals on this chart have emerged. First, there is a bearish continuation on both RSI and MACD with these lines here, along with bearish divergence with this line here. The bearish continuation looks somewhat strong and could present some considerable downside from here. If you found this report useful in any way, please give a like and subscribe. Thanks for watching, and see you next week for another weekly report.